This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using for the past several weeks. As I mentioned, this long trade right here, I set up a few reports back, but prices have slipped back to that level, and again, this is just beneath that 88 figure. So moving forward now, as I mentioned yesterday, we might look to get long just beneath that 88 figure and place our stop maybe 15 or 20 pips beneath the low of this candle here. That low is about 87.56. So moving forward here, although my confidence is sort of on the downside here as this line is tested. The more times a support line is tested, the more likely it is to fail. But hopefully this could turn out to be a triple bottom or even an inverted head and shoulders, borderline inverted head and shoulders at this point. So moving forward, I would still have that long bias and would exit, either placing a stop just like I said, 15 pips beneath the low of that 87.60 area, or exit and more. This is what I would suggest, is exit on a close beneath the level. It might represent a little more risk, but also will have that extra confirmation of a close beneath the support level. The next chart is the Aussie Kiwi. Not much has changed here. Again, still short off this doji candle here. The high of that candle is 129.35, so that's the key technical level for the Aussie Kiwi here moving forward. What I would say here, as I mentioned during yesterday's report, we might look for prices to move up to that 28.70 area or 28.80, which is what did occur during yesterday's session. So that's a good place to initiate another short position, but again, placing our stop just above the high of this doji here, which is 129.35. Also, you can argue the last candle was a borderline doji candle. The only issue is it also could be seen as a hammer candle, which would be a bullish, which would have bullish implications. So moving, and what I'm still just focusing on this doji here and looking for short trades against that 129.35 high. Again, I place my stop about 15 to 30 pips above that high. The next chart is the Pound Swiss. Not much has changed here. Again, still waiting for prices to come down and test the longer term support line, and we've had a substantial rally now, although prices sort of from nowhere, prices did not come down to that simple support line. So moving forward, just keep this on the radar screen. I like this support line here, and I have a feeling that it will set up a good trade at some point in the future. The last chart is the Euro Swiss. This is a daily chart, and the sideways price action here continues. Been a very tight range, just beneath that 52 figure to just above the 50 figure. So maybe shorter term traders would look to play the range here. That would be looking for short trades around the 51.70 area, and then covering maybe 100 pips or so in the money, and looking to initiate long positions just above that 50 figure. But again, the longer this range sort of continues, the more likely an eventual breakout is to occur. And again, my feeling is that it would be an upside breakout to test the longer term resistance line formed by these highs here. And again, what we would do, we'd look for prices to touch the resistance line, enter maybe at the resistance line, and place our stop about 50 to 75 pips above the resistance line. And even though this trade is taking a long time to set up, it doesn't mean that the move to that resistance line is less likely to occur. In fact, it actually means that it's more likely to occur. So I would keep that on the radar screen. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.